been one of the most prominent fund managers in the world. Mark Mobius, who recently hung up his boots at Franklin Templeton after heading its Asian operations for almost 30 years, has now joined an Indian venture capital fund, running an alternate investment fund. Well, I spoke to Mark Mobius about his new investment mantra and how 2018 may pan out for equities at large and Indian equities in particular. Here are a small slice of that conversation.
You know, we're at a stage now in developed markets, particularly the US market, where the valuations are at a high level from a historical perspective. So there are many arguments that can say that we are at a point where a correction is probably imminent in the US and in other markets around the world. So we're coming out of this period where the low interest rates generated a lot of interest in markets and risky investments in particular. People were willing to put money into things that were not very viable. So eventually there has to be a correction. The correction can be significant. So I'm telling people, look, it's a good idea to keep some dry powder in the event that such happens. But the timing of such a correction is impossible to determine because things have really changed in many, many directions. There's so many other opportunities that we're seeing come into the markets, particularly in the internet space and the technology space. But yes, I would say that, you know, we have to be careful and expect a correction. We've already seen some corrections, but this can be extended.
Yeah, and Dr. Mobius, I'll come to that India part as well, but just to get 2 or 3 questions out of the way before we move to India and what you're doing now, which seems to be very exciting. Bank of America Merrill Lynch recently did a survey, and according to them, and according to that survey, an inflation-induced bond crash remained top of the list of tail risks cited by investors across the world. Do you think any correction that comes in, and a significant one I mean, not really a 5-7 odd %, do you think a significant correction will be followed by or will be led by a bond market crash? Not that bonds have really gone up, but do you think that will be the lead factor towards other asset classes also coming off?
Of course, it's quite possible that this is going to be the case because with rising interest rates, the bond market is impacted. There's no question about that. The question is that the speed that these changes take place, the speed at which the Fed decides to raise those rates, that will have a big impact. But we have to be careful because if you look at the bond market, that's one thing. If you look at the equity market, that's another thing. And there often is no correlation between the two. In fact, our studies show that the Fed rate has really no consistent correlation to what's happening to the emerging markets index, for example. So, you know, sometimes rates go up and the market goes up, which is what you would not expect. So I think we have to be careful in drawing these conclusions. But yes, everybody's watching the bond market very carefully. It's a bigger market than the equity market, and currencies play a big role because with the weakening US dollar, we're looking at emerging market currencies looking rather good, stronger relative to the US dollar. So this is something we have to watch carefully.
Okay, what are your thoughts here, Dr. Mobius? Because a lot of chatter about how the dollar-based investors benefited a lot in calendar year 17 because how the dollar moved vis-a-vis a lot of local currencies. How does the trend look to you in 2018?
I think the dollar will continue to look weak against many of the emerging market currencies. Of course, there's an argument to say that with rising rates in America, money will be attracted. But on the other side, investors are looking at the growing deficit in the US, the heavy expenditures by the Fed, and also reducing emphasis by many national investors for their foreign reserves in US treasuries. And particularly the Chinese have been reducing their exposure to US treasuries. So that would have an impact as well. But I would veer on the side of probably a weaker dollar going forward.
Wow. Okay, now, drilling it down to emerging markets and then to India as well and what you're doing, Dr. Mobius. Firstly, the emerging market pack. A lot of chatter in India at least, and probably in some pockets of the Asian and the emerging markets, that the micro will now start working and working in a big way. India has for the better part of the last 2 years lagged the global markets in terms of GDP growth and earnings growth. We'll probably start seeing that in India and maybe some other emerging markets too. So do you think this micro benefits or the micro working will help attract flows even if the macro were not working completely in our favor, say interest rates, say commodity prices like crude or otherwise?
Definitely. This is particularly true now with the Modi administration trying to encourage investment, not only local investment, but foreign investment. There's an incredible opportunity here in India to invest in infrastructure and many other areas. And the fact that the government is now focusing on encouraging investment will have a big impact. And that goes to the micro level, individual companies, individual industries, individual opportunities.
This GDP growth will probably come back. Almost everybody's talking about that. If earnings come back and come back in a hurry, do you think there is that the principal reason why you, in your last televised interview to Bloomberg, mentioned that you believe that emerging markets as a pack and maybe India individually as well could scale newer highs in calendar year 18?
Yes, I believe that's the case, because we're seeing a lot of positive developments in these major markets like India, even China. You know, a lot of people are concerned about debt in China and the viability of the banking system, etc. This has not turned out to be the case. And we think that, you know, the markets generally will reach new highs. By the way, Russia's now coming back and looking good. Brazil already has come back. So these big emerging markets have performed fairly well. And I think there's a good chance that we can surpass previous highs.
And for somebody who looks at all of these emerging markets, Dr. Mobius, do you think India remains a sweet spot, or is there a lot of competition from the markets that you mentioned and some others for flows to come into the countries?
There's a great opportunity for more flows to come in. As you know, there are many bureaucratic barriers for foreign money to come into India. And I believe the Modi administration is going to begin to address those barriers. And that will encourage a lot more investment. And my belief is that India will outpace China in terms of growth, which means it will be the fastest growing major market in the world. Under that kind of scenario, the interest in investing in India will grow very rapidly. And we're now to a point where the country is beginning to look like it's on the takeoff stage, where it's really getting into a sustained growth and development, which will be very good.
Could that be one reason why, Dr. Mobius, you are now starting off this new line, investment opportunity in the Indian early stage ecosystem? What attracts you to such an opportunity?
Well, that's it. There's so many incredible entrepreneurs. I've been meeting a few here at Equanimity the last few days, and it's just amazing. The creativity, the management skills, the drive that we see in these entrepreneurs. And they're covering a full range of industries. It's quite amazing. That's the advantage, by the way, of a country like India. It's a large country, many things happening, many industries, and a market big enough for any industry. So that is of great interest to us. But then, as you know, I'm establishing another management company, another fund management company in London. We're looking at establishing a company that will emphasize ESG, environmental, social, and governance standards. And we want to use Indian research organizations to help us to locate these firms and analyze those firms. So I've been also talking to such firms here in India. India, of course, has got outstanding capabilities in that area.
Okay, so I have last couple of questions on this, Dr. Mobius. For long, India has been a market wherein foreign money typically floats only to the top 100, top 150 firms. Naturally so, for liquidity reasons, for corporate governance reasons or otherwise. Local flows have now started investing into a lot of small-sized companies. You mentioned that your interest of coming and starting off with Equanimity was also due to look at early stage companies, which by definition would be smaller in nature. Do you think that that nature of investing could change, wherein a lot of global money could look at niche plays within a country like India, also because of the kind of market opportunity that exists within the country?
Definitely. You see, the nature of our business, the fund management business, has changed dramatically. You have the index funds, that have dominated more and more of the flows coming into emerging markets. Of course, not only emerging markets, but developed markets as well. So the active managers are now focused on finding new opportunities, opportunities that you would not necessarily find in an index company. And that's the reason why there's growing interest in private equity, in smaller and medium-sized companies, and in companies that are sort of outside the scope of what you'd normally look at when you're doing an open-ended product. So I think this has had a big impact and is going to have a bigger impact going forward. So there's going to be more and more emphasis in searching out different opportunities that are unique and something that you would not find in a normal index fund.